All right. Hello, everyone. Another live show. Welcome, welcome, welcome. I see lots of people are already in the comment section. Water, Gonzalo, welcome to the show. Definitely a special one. Today was a really interesting day. We were up, we went down, we kind of went back up again. There's tons of stuff happening in the crypto market. As you guys know, Andrew is traveling, so I've had the privilege of talking to some of our more experienced moderators in the past few weeks. Yesterday we had Peter on, and of course, with everything that is going on in the crypto market, it's only right to have Jared back on the show. Jared, welcome, man. How you doing?
Doing very well, Artie. I'm very happy to be here. I'm looking forward to talking about some of this volatility because I think a lot of people are learning and kind of confused as to what's going on and what it means moving forward.
No, yeah, exactly. I mean, yesterday Peter was on here. We talked about risk management, and just before going live, you and I were having a conversation, and I was saying it's really challenging. Like if you're a newer trader and if you're like premium selling and you don't know what delta hedging is, you could really blow up your account. You got to be careful. And before actually going live, I was having a phone conversation with Andrew, and he was saying this is also a challenging market. He's been following the market while running, and he said this is not similar to 2018. And yeah, there's tons of new dynamic, right? Market is always changing. So without kind of further ado, you can see our disclaimer. Kind of an agenda, Jared, for today. We, of course, we're going to talk about overall market. I really want to get your perspective on what's happening in the crypto market with the stable coins. We're going to discuss earnings, Coinbase, Rivian, Beyond Meat. You did an amazing trade on Rivian and you used the option chain. So if you could, talk about that as well, that would be amazing. Volatility and market. So a full-on packed show, lots of interesting stuff. But before we really get into the market, Jared, I asked Peter yesterday this question and his answer was really surprising to everyone. I'm going to ask you as well. Is this one of the hardest market you've been trading in?
It's almost a toss-up between this particular time frame and more or less my style. So I'm primarily a long bias trader. If I'm not looking for uptrends, I'm looking for reversals, mostly to the long side. And while there are opportunities like that, you have to be extremely careful on down days. This is one of the few times in a long time where some of the draw ups in the market have no bounce. They basically will give back and then some. And if you're scaling in, looking for retracements or pullbacks, sometimes you just don't get them and the market completely reverses from some relative high. So that key aspect is a little challenging, especially if your bias is long. Additionally, the only other time I could think of similar to this was getting into the end of 2018. The S&P had formed sort of a volatility range, probably like a 40-point range overall. And there were days where we were trading inside that range, up and down, half of it. So the days that were long, they were long all day. The days that were short, they were short all day. And you just had to watch out for those inflections and then the eventual break into the end of the 2018 period.
Yeah, yeah. No, that's amazing. Well said. Very similar. I remember in January, so right at the beginning of the year, when the year was starting, you were talking about, hey, the rate hike in 2018 and how the market reacted in engineering the market. And I remember that was like, I was doing my option session. I'm like, you guys need to pay attention to what Jared is saying and how the market reacts when there's rising rates environment. And we've been on this. So it's really great to get your perspective. Any advice you have? I know risk management, of course, but any advice for people just starting out right now their trading career?
I would say if you're getting live, especially day trading equities, this is one of the best markets to start small in. So if you're building strategy, especially more common trend following type strategies, whether it be long or short, starting small and widening out stops in this type of volatility environment allows you just enough time to stay into your selected trade. And typically, if you're right, you can be right for the rest of the day. So like I said, a lot of the time when you get into a good trend, those trends last for hours. And as a day trader, that's ideal because you want good location and then eventually just the follow through. This market is offering great follow through, but you have to be positioned well and you can't get shaken out before those big swings, eventually take place. Usually it takes a little time.
Yeah, yeah. No, exactly. Start small. That's a big one, and really understand. Somebody on Twitter, somebody said, and truthfully, I was talking about market and risk off, and somebody said, Artie, you're being a little insensitive. A lot of people are losing a lot of money, and people are going to be scared off the market for years to come, similar to the dot-com crash. And I agree with that, but that's one of the reasons why we're just like hound on so much. Hey, look at the 10-year, what the 10-year is doing. Are we in a risk on? Are we in a risk off? Understand the bias of the market. Like that's one of the reasons that we do this, right? Is we don't want people to get burned, right? We don't want people to, keep adding on, turning a day trade into a swing trade, keep adding to a losing position, things like that. So that's kind of what we're doing. At least we're hoping. Jared, any other things, any other piece of feedback? Because I want to take this into the crypto market. There's tons of stuff going on, stable coins. Any other thing before we move forward?
I think the only thing is it's been a pretty good earnings season. Even though we've gotten through the big names that everybody knows and will obviously shake the market, some of these lower market cap names have been extremely volatile, both into earnings and then the day of. And I'm looking forward to talking about that because there's some good analysis on those particular names.
Yeah, beauty. Right after we talk a little crypto, we're gonna get into earnings. We're gonna get into some of the forecast, the guidance companies are giving. I think Rivian and Roblox did pretty much identical. Was it Rivian? I think it was Roblox and even beyond. I think they all gapped down and then kind of rallied into the open. Option chain had something to do with that, and I think you traded them both times. So I can't wait to get into those. But let's get into stable coins. Jared, can you spend a couple of minutes, like educate me, myself, what the stable coins are and what is happening to them and what's kind of your analysis?
Themselves as a stable offering, so a stable coin, allow for transactional, almost like a third party in regards to transferring from one asset to another. And usually this is due to the fact that you don't necessarily want to go back to fiat in a lot of these transactions. You often simply want to stay inside of your exchange and just go from, in this case, one token maybe to another. Maybe you want to deallocate from one asset into what is supposed to be a stable, and in this case, a pegged asset, something that's not going to have a lot of volatility. So the project purpose is to allow for those transactions, along with offer sort of a holding ground if you are looking to change allocation. And what's really interesting is there are aspects of what stablecoins offer in regards to kind of cross platform interoperability. There are things called bridges as well that kind of accomplish that for programmatic aspects, but as far as transferring digital assets, that it can be used in that way.
What's kind of the to go reserve requirement for these stable coins? Because the thing is, and I'm hearing this a lot, but like our banking system is also a fractional reserve system. So for every $100 that you deposit, the bank's not going to keep that 100. They'll probably keep, depends on their reserve requirement, they'll probably keep only $10 of it, and then the other $90 is in circulation, whether it's in loan generation, asset-backed securities, things like that. So I mean, it is theoretically possible for banks also to go belly up if everybody want to get their deposit out. So I don't really blame stablecoins in that sense, because fractional reserve system is what capitalism is based on. But like, is there reserve requirements for these stablecoins, or what kind of regulation is there?
That's a good question. And to be frank, I don't know 100% of that
Yeah.
answer. But most of them do have a certain reserve requirement. Obviously, we're kind of looking at some of the bigger names at this point. So you want to be thinking Tether. Obviously, we'll talk about what happened with US Tether.
Yeah.
and there's some sort of what are they called? DAI, DAI offering.
Hmm.
Those ones should have their own respective reserve.
Yeah.
What's interesting is the transparency behind them has not always been adequate. So
Right.
there's been multiple concerns with specifically Tether in regards to, are they keeping up their reserves? Are they altering the reserves within some expected bound? And who's auditing, those numbers? Who's actually keeping track of it all?
Yeah.
So it brings this idea of like, how many governing bodies do you need to keep the system stable?
Yeah.
And at what point does it become a reflection of our current system?
Yeah. Oh, well said. There are some rumors that BlackRock and Citadel are behind some of these attacks on their stable coins. Have you heard them? Do you buy them? Any comments? No comments?
I've heard about Citadel. I
Yeah.
haven't heard BlackRock yet. So, um, I mean, a good rumor usually has a little bit of truth behind it. I'm wondering how much of it is sharks in the water
Yeah.
taking advantage of the volatility, because at the end of the day, some of these offerings, if they are to destabilize, the upside risk is inherently sort of refined. It's bit defined. Obviously, there's this idea of maybe over leveraging in one direction to kind of force margin against a short attack on one of those names.
Yeah.
But overall, if you're trying to short something and the upside is a bit limited, that's actually really attractive, especially if you're trying to see it fully collapse. So
Yeah.
I am curious how much big money is behind this, and who specifically.
Yeah, yeah, I mean, I feel like we're in like the midst of this financial crisis, and we're gonna know in 6 7 months, like the stories and the documentaries are gonna come out of the hedge funds that were attacking stable
Right.
coins. It's going to be very interesting. But every time there's a problem in the crypto market, the first person that gets blamed is Ken Griffin, and I find that fascinating. Um, Oh, Jared, any Bitcoin broke below 30,000 briefly. I don't know what it's trading at. I think 28,000 last time I checked. What do you think about MicroStrategy? I set up a put spread expiring in July. So I spent yesterday really looking at their fundamentals and how much their cash burn is and how much their revenue is. And they have over $2
Mhm.
billion in crypto. So I think as the rate's going to start increasing, even though the company is already down 50%, I'm basically my put spread is 150 to 100. So I'm betting that it will go down even lower.
Mhm.
And the expiry is in July. But what is your prediction on Bitcoin and the companies, especially MicroStrategy specifically, that has so much Bitcoin on their balance sheet?
So it's really challenging to make price predictions,
Yeah.
especially in this environment. Um, Short term, what I've noticed past couple of days is this stablecoin destabilization is causing volatility across the crypto market. It's not just Terra and Luna. That definitely became sort of the focus point, but there was a mild depeg in Tether, and Tether actually is highly correlated to some of the Bitcoin volatility we've seen recently. So all I've done on the side of my screen here is I've actually combined US Tether into the Bitcoin chart, and that is 1 to 1.
I see.
Um, Sorry, I thought I lost audio there.
No.
So that short-term volatility definitely concerning. Another thing that's a bit concerning here is I always think about it from the perspective of buyers and sellers. And when I look at what prices are today, what it tells me is that every investor who bought Bitcoin over the past year and a half is under,
Yeah.
because the price appreciated above 28,000 as of the first of 2021. So the entire time that the market's been excited and interested in crypto, as far as retail involvement, most retail traders are either down or in some way navigating the volatility through trade.
Yeah.
Obviously getting in and out at the right time. So, yeah, it's going to be challenging moving forward. Anytime I see a breakdown like this, regardless of if it recovers or not, it puts enough fear into the market to destabilize things for quite a while. And
Yeah.
I'll be looking for kind of confirmations on the price chart along with trend changes, which we've already got things like monthly downtrends in the Bitcoin price.
Yeah.
So
Yeah, it's definitely going to be really interesting. I love your answer that, the price predictions is really hard. And when you tell people, hey, we're traders, everyone's like, hey, where's the markets going? It's like, this is actually not what we do. What we do
no.
is really try to take calculated risk. Shall we move on to earnings? I want to start with Coinbase, just so we're still talking about crypto, and then move on to Rivian and Beyond. You traded Beyond as well, right? I remember.
So I did not trade Beyond.
Oh yeah,
Beyond was this morning. I decided to trade Rivian instead.
Rivian.
Beyond was pretty much on my same watch list, and it had the same analysis behind it, but it was a bit more
Yeah,
volatile. It
yeah,
actually halted a few times on the upside, so Rivian was a
yeah.
little easier.
Yeah, yeah. No, that was it was great. I think that option change it doesn't happen really often, very rarely you see, but it's something that you could even build a strategy out of it, and even do a webinar. I think members will find a lot of value. But let's get into earnings. We talked about Coinbase briefly yesterday, but I think it's only right we talk a little bit more about it. So retail monthly transaction fell to 11.4, from 11.4 fell to 9.2 million. The revenue was a huge miss. When I was looking at something, I was reading something on yesterday on their 2030 bond, and the 2030 bond is trading at a discount below par. So bonds, they usually trade at 100. 100 would be a par for our viewers who don't know. Those bonds are trading at 60. So 60 cents on a dollar. So at a huge discount, that means anybody that buys them, the yield to maturity is going to be really high. They can get a lot of yield out of it. But that's contingent of coin, not going bankrupt or having any difficulty. And then in their filings, they talked about, all those liability custodians that is in their balance sheet. So all the people's asset on their balance sheet. If the company goes under, they're going to be treated like equity. So like a last tranche of a debt holder, which is basically after all the debt holders are paid, then you can get your money back. So that caused a little bit of commotion in the market. Jared, I know you're mostly a technical guy and look at the chart, but what is your read on coins earning?
So it kind of correlates pretty well with the retail involvement. I mean,
Yeah,
transactional volume coming from retail. Coinbase is one of the largest exchange offerings that the U.S. has. It's one of the few that offers FDIC insurance.
yeah,
So a lot of retail traders just kind of naturally navigate towards it, and it was one of the first offerings that did that. So
yeah.
that's where a lot of people started. I find that the migration moat of Coinbase is pretty high. So not a lot of people are willing to transfer over unless they have a purpose to transfer over to a different exchange.
Right.
And with a more bearish sentiment, I do find transactional volume to be lower. Retail is not going to be stepping in, putting their money in the market anymore until things kind of change. Additionally, when I think about this particular cycle in crypto, whether it be Bitcoin or other or altcoins, um, the transactional volume relative to the performance of the assets is also something that's a little bit different this time around. For example, every single halving cycle that Bitcoin's had so far has been more parabolic, and most retail traders were looking for it. They obviously were stepping in thinking that that's going to be the next wave. This was more of like a double top, the rejection at all-time high, the high volatility back to the lows. We really haven't seen this before in a halving cycle, and it's affecting, as we kind of say, Bitcoin the leader, altcoin either follows suit and has its own season, or it takes, the ladder down in regards to more downside. It tends to be more volatile. So
Yeah.
um, I'm hoping that things kind of change in the next couple of quarters, but it really depends on what monetary policy looks like. Because if equities are kind of hurting still moving forward, and crypto is still perceived as a higher risk asset, I don't see that relationship changing much.
Yeah. Yeah, it's very interesting how monetary policy at the end of the day plays into it, right? Like the risk-free rate and the equity risk premium, right? Like what is the risk premium in the equity market, and are investors willing to take that risk in compared to risk-free asset? It's quite interesting. Rivian had earnings. Let's briefly take a look at their numbers as well. Before I do that, I'm looking at the chats, and someone's saying, Sal is saying Coin CEO tweeted that the bankruptcy clause. Yeah, absolutely. It was a SEC requirement. You're absolutely correct. And I don't think that is really a sign of worrying. They got about $6 billion cash. Up until last quarter, they were free cash flow positive. This quarter, they lost about 800 million, I think, last time I checked. So they didn't have a really good quarter. But another thing is you can look at the bond market and see what their bond is trading. So when their 2030 bond is trading at a discount, that means market is not really confident, right? In terms of overall situation. But again, bond prices can move as well. So we're not really implying that, hey, this company is going to go under. For what it's worth, Cathie Woods has been buying a lot of shares, so that's another thing. Again, use this opportunity. We got a lot of people live watching the show. I really appreciate you. If you could like the show, subscribe it. We're going to go live Tuesday, Wednesday, and Thursday, right before the market close. We're going to have guests every week. This week we're with Jared. Jared is one of our OG moderators in the chat. He's been with the community the longest, and we really appreciate his insight. And use the chat if you want to ask questions to myself or Jared. It's a great opportunity. Jared, Rivian, over 90,000 pre-orders, which is, I guess, pretty good. They lost quite a bit of money, and they were estimating 128 million revenue, only 95 million. So, of course, blaming supply chain, that's a no-brainer, and expect to do about 25,000 vehicles this year. Even in Beyond Meat's earning, I realized a lot of the forecasts, like the future is getting really uncertain for CEOs and management. Like guidance are all coming down. So that's one of the things. And as long as we don't see an uptick in the guidance, I'm mostly defensive. So I'm long healthcare, long utility, long staples. And as long as I don't see an uptick in guidance, I'm not going to shift my tactical weighting on my portfolio. But what was your read? And also walk us through that amazing trade that you did on Rivian.
Yeah, so I definitely reflect your sentiment bias in regards to sectors. I think those are going to be performing until we get a big change in economic conditions. And when I think economic conditions, I think business cycle, like you've been defining. So let's say we are on that late stage. It does appear to be that way. Things are improving and almost topping out in regards to economic growth, and yet the market is seeing, one of the deeper corrections we've seen over the past couple of years. So whether you're positioned around that to take advantage of uptrending sectors, energy, staples, utilities, and healthcare in this case, or you're looking towards the next wave, which is, taking advantage of this correction and looking for, positioning around financials and potentially tech. Because if bond prices are to rise, if interest rates have started to top out, we should see some tech performance at some point. It's obviously not showing yet. So that sector rotation analysis, I love that part of the market. Yeah. As far as Rivian is concerned, I was looking to see what sort of reaction the market had today in regards to their numbers. Obviously, with the option chain, I was looking to see how hedged was everybody's position, and that was what really caught my eye, both for a lot of growth names like Rivian and just across a lot of the earnings this week. Most of the names are, I won't necessarily call them speculative, but maybe unproven companies. Companies that could easily be sort of shifted around or even reacquired in the future. So with Rivian, I was looking at their option chain. I saw that there was a lot of inventory hedged to, I want to say, and you'll have to forgive me, I'm kind of misremembering all the numbers here.
I think it was at 40, right?
Yeah. No, they were looking at like 22 and 20 was pretty heavily weighted. and then a lot of the volume today came in at the 20 strikes on Rivian. So
Yeah.
the downside there was evident before earnings, and then of course today people traded around the highest open interest. So I found that to be kind of interesting. There definitely was a lack of confidence into earnings. I think Rivian took maybe like a 40% sell off in the past 4 days. And then,
Yeah.
of course, earnings come out and people kind of reposition around new information.
It's truly it's remarkable when you look at these companies. My only advice, anybody who's position trading, is try to stay away from cyclical for now until proven otherwise. There are, as Jared mentioned as well, it's looking like we're in a late stage business cycle. So you really want to be away from those cyclical names. But I think as inflation come down, Jared, I also agree with you. I think the great opportunity would be, I was thinking about some leaps on VUG, which is Vanguard Growth. So if we actually see, hey, inflation is starting to come down, and maybe the yields have topped out, some option leaps on VUG could really work out. But we gotta wait another month because inflation was hot this month, so that trade might not work. Yeah. Let me see. Let's go to our trading terminal really quickly, and take a look at calendar and what's coming next week. I know we're almost done with this week's earnings season. We got some staple names reporting. So you got Target on Wednesday. You got Walmart on Tuesday. Home Depot on Tuesday. These will be interesting. Let's see what else. I don't recognize Foot Locker on Friday. Probably gonna get slaughtered again. This would be interesting. Macy's could be interesting. Anything catching your eye, Jared? Yeah. Oh yeah.
Still willing to spend a little extra to make those improvements, and it's Home Depot kind of seeing the boon of that in regards to their earnings. So those names seem interesting. I also saw Take Two on there. I think that was Monday. Um,
Oh yeah.
just
Yeah. Oh, 100%. It was this season, earnings season was really interesting as well. I wasn't as aggressive as last season, but still a lot of opportunities. With this massive sell-off and like correction in valuation, Jerry, I'm actually down to do some research maybe with you and find some good acquisition targets, because I think some of these companies are gonna get bought out at a slight premium. And if you have like option plays on them, you can make a lot of money. The one that I'm thinking, I mean, Roblox is still expensive. I think they're still trading at like 5x revenue. But I think if the valuation gets more attractive, maybe Apple want to get into gaming, maybe they could buy them. I believe as markets stabilize, there's tons of acquisitions going to happen over the next 8 to 12 months. And if you're a merger arbitrage trader, you can make a lot of money. Robinhood. There's tons of negative enterprise value companies. Anything catching your eye right now?
Oh, that's a good question. I was trying to think of it as
I know you don't want to give all the alpha away. You want to keep some of the alpha for yourself. But anything catching your eyes?
No, I'm kind of thinking along the topics we've been discussing. So, Robinhood fits into a slight bit of that crypto side. And if crypto is being disrupted, it obviously affects a portion of their business, but not enough to re-highlight. I'm kind of drawing a blank here, but one thing that would be worth looking into, a lot of these acquisition targets, if you are going at them with options, you basically want to limit your downside. So whatever you do, you're basically risking either the premium you put up or building something in such a way that it's almost a free trade when you put it on. And the first thing that came to mind is the back ratio.
Yeah.
So, if we do identify some targets, I think a back ratio would be the right strategy or something similar to it.
Yeah.
Completely limit the downside. If it keeps selling, no one wants it, it goes to zero.
Yeah.
We basically walk away scotch-free. If it
Yeah.
does happen to be one of the targets, that upside is unlimited. So
Yeah. Yeah.
whatever they decide to price it at, that becomes our profit.
Yeah, yeah, no, exactly. That's a great point. So if Santiago can put up my screen, I just really want to show people what a payout diagram of a back ratio would look like. So it would look something like this. Basically, you're hedging your downside, and if the company gets bought out, somebody buy it at a premium, your upside is unlimited. So this is a right strategy, very well thought out. Thanks for bringing that up, Jared. That's why we have you on the show, to share this knowledge. So any questions? Lots of questions about I like to rush RSI for acquisition target. I'm not sure, Salty. I got to do some research on that. Do you know about RSI, Jared?
No, I can't say I do.
Yeah, we'll take a look at that. Rylan is asking, would it be accurate to say that you both utilize option open interest similar to how Thor uses level 2? As in finding potential points of liquidity, inflection, or interest? That's a great question. Jared, do you want to take that?
Yeah, I'm really glad to talk about this one. This is actually a defining aspect of the past couple of days of trade for me.
Yeah.
So for coin, there was an interesting lack of liquidity whenever the earnings was about to come out. The CBOE did not open strikes lower than, I believe, 50 for coin.
Yeah.
And therefore, there was an inherent lack of interest in the price going lower than 50. Now, 50 was interesting, but there was also $5 wide strikes between 50 and 55. So no one in the option market, at least retail side, could hedge between those prices. And as coin did have a negative reaction, came into like 53 in pre-market,
Yeah.
the market maker doesn't want to transact at those prices. There's no, value there until the market opens. And therefore, there was a nice, almost like a $5 to $7 rally on coin. We came off of about 53, 54. We made it up to 61, which is where another big pool of liquidity was, or
Yeah.
inventory on the option market. So that small inefficiency has happened a few times. It happened on Beyond. They didn't have anything below 20.
Yeah.
And you saw Beyond today. Beyond went from 21 to maybe 29 in open market trade today. So that it's almost an imbalance. The market can't move through those areas unless there are people willing to transact.
Yeah.
And the option market kind of highlighted it for us before the market even opened.
Yeah. No, you hit it right on the head. That's exactly right. Especially in extreme situation like that, the option chain can give you a lot of information. I mean, overall, Ryan, like there's always going to be more open interest on the round numbers. I've talked about it in our sessions in the chat room. So you don't want to maybe base your trading completely on them, but in situations like this, stock's going to rally because there is no strike below. So the market makers have to be able to hedge if they're willing to sell you those puts at $20. They have to have the underlying short. So these type of imbalances really play out and can be really opportunistic. And of course, Jared killed it trading them both days. So if you want to actually learn more about that, he also did a recap today. So the recap is up in our channel. So make sure to check it out. He spent a few minutes actually explaining in more details the mechanism. Let me see if there's no questions, we're gonna call it off because I don't want to take your time more. Yeah, Ryan, no problem at all. Thank you so much, everyone, for being part of this show. We're going to be consistent Tuesday, Wednesday, and Thursday right before the close. Hopefully next week we'll have Andrew back. We're going to have guests over. We're going to have John. All of our traders. We're going to invite some of the traders as well who's been having a lot of success. So this show is for you the way you want it. So make sure to comment, give us feedback. However you like it. You wanted more trading, you wanted more macro, whatever you like. This is your show, your time. and I'm just glad that I'm part of it. Jared, any final words from you?
Um, like I said before, I think across multiple markets, whatever your asset class of choice is, keep it small and keep it simple right now. Things are obviously destabilized in a lot of different ways. People are experiencing volatility they haven't seen in quite a while. You know, I wanted to bring this up as kind of a last point. The S&P, the SPX hit 20% drawdown from all-time high as of today. So we are literally poking the bear as of the S&P right now, and that bear is obviously hitting us, but it actually hasn't woken up quite yet. So we'll see if this is an inflection or if it's just the beginning.
Yeah, that's a great point. We are just entering the bear market in SPX and S&P, and this is a really important point. We'll see. Tomorrow we'll be telling, so I'm going to be watching tomorrow how the market reacts. But again, for myself, I'm still overweight on the defensive names. Wow, it was awesome, man. Every time you're on the show, every time you and I are having a conversation is a true blessing for me. I always learn something new. Thank you for coming on. I know you're extremely busy, so I really appreciate that, giving this hour for us. I hope all the members really got a lot of value out of it. I really appreciate everyone, being in the chat and being engaged. We'll see you next week, and we'll see you for season 2 of After Hours with Traders. Jared, any plans to come to Vancouver? Man, we missed you in the last meetup.
I would love to come. I know that we're trying to get some meetups together this year. It's
Yeah.
been one of the more active years in the trading community, but getting some actual one-on-one time together with all the mods, that would be great. Seeing
Oh,
some of the
yeah.
community members in person. I don't know what half of y'all even look like. I just know y'all by name, so I'd love to kind of get face to face at some point. And if it's Vancouver, I'm definitely gonna mark it on my calendar. So name a time and place, and we'll set it up.
That'll be amazing. That'll be amazing. Can't wait. Can't wait. All right. Thank you so much. And that kind of wraps our show for this week. We'll see you next week and have a good one. Thanks again, Jared. Bye, everyone.
All right. Bye, everybody.